Yesterday, we discovered that whole life insurance was the ideal asset for the foundation of your balance sheet, your corporate balance sheet. Today, we're going to have a look at how versatile that can be. So again, we'll just quickly recap and remember why it was so perfect as the foundational asset for our balance sheet. So number one, it is tax advantaged. Number two, we have stable returns. Number three, it is liquid. Number four, it's guaranteed. And number five, there's that life insurance component. So these make it ideal as the foundation of our balance sheet. But there's somebody else who really likes these attributes, and that person or that institution is the bank. So what happens? This asset is ideal for leveraging. So when you think about it, what would you really like if you were to leverage against something? What would be the perfect collateral, the perfect asset for you? Well, you wouldn't want it to grow and cause a lot of tax problems, because then that would make it a lot less efficient for you. Number two, you'd want stable returns, because you don't want to be in a situation where the asset loses value and your loan is growing. Number three, you want it liquid, because if at some point you want to pay out the loan, you want to be able to do that. Number four, you want guarantees. You want to know for sure that that asset is going to be worth something in the future. And the life insurance, generally speaking, we want to protect our business partners or our family, so life insurance is also helpful. So when we're looking at leveraging, this is the perfect vehicle for leveraging. It's perfect for us. It's also perfect for the bank. So the bank is willing to lend us 100% loan to value and prime as the interest rate. So we've got a low interest rate and we've got a very high loan to value. So when we're going to use this money, we're not just going to pull the money out, because if we pulled the money out, we'd lose the advantage of the stable returns or the tax advantages. We've got all these advantages. We want to keep this growing tax deferred within the corporation, because that growth is really going to help us build our wealth over time. So we don't want to take it out, generally speaking. We want to leverage against it with the bank. So let's have a look at how that works. So we've got our asset at the base of our corporation. Say we've got $100,000 going in there. So we've got $100,000 in the asset. Now we're going to borrow against it. And remember, we can borrow 100% loan to value and at prime. So we're going to borrow this $100,000 out. So again, we've got $100,000 cash value here, and we're going to borrow that $100,000 out. So now when we both pull that money out, if we use it for an investment or business purpose, we can now take that interest and even the net cost of pure insurance, and we can deduct those expenses against our taxes. So now we have 2 deductions that we can take against the interest that we're paying on this loan. So it becomes very, very efficient. So sometimes we'll talk about the fact that we can actually increase somebody's investments over time just by making tweaks to their cash flow, or we can help somebody raise capital for something in the future just by making tweaks in their cash flow. We become very, very efficient, and we're able to build the wealth in the corporation as a result of that. So just to give you an example of what I mean by this, an investment or business purpose within the corporation would be something like salary, because the corporation has to pay its employees, including you, because that is a business expense. Something like capital expenditures, like growing the business. That would be a business expense. So that would also give us the tax deductions. If we put it into real estate, that might be an investment. And if we put it into investments, of course, that's investments. So some of the things that you are going to do anyway with that money, you can still do those things and be eligible for the deductions that you're getting in borrowing the money. So really, when you look at it, this is really an ideal way for you to set up your corporation. Again, if it's appropriate for you, we can never say that one plan is going to fit every person. This is generally speaking about these plans. But you can see how ideal it becomes that we've got this asset growing within our corporation at the same time as being able to do all of this. We can pay salary, we can grow the business, we can get some real estate, we can do some investments. So really, when we're looking at the way that we can really grow our wealth over time, it's the way we put the assets together that helps us really grow our wealth in the business. It's not always choosing the asset, like choosing a stock that's going to explode over time or choosing a cryptocurrency. We can actually look at ways to make our assets work together and combine together to augment the effectiveness of those assets. So it ends up that the many are more than the sum of their parts. We put them together in such a way that they're complementary and they build wealth over time. And that's what we want to do in financial planning. So again, if you want to look at something like this for your own situation, you can get in contact with me or talk to your own financial professional. That's fine. And we'll talk to you on Monday.